All right, Josh, welcome back. We are live.
Hey, everybody. Thanks for joining us. I am Josh, the designated broker for Good News Realty Group, and that's John, co-owner of Good News Realty Group. Anyways, we are so excited. We have a lot to go over. BR just came out with their new stats, but I don't want to steal the thunder from that. John, do you want to go ahead and tell everybody what we're going to be going over today?
I will. First of all, I want to say welcome back. You've been out forever. Seems like forever since we've been able to do a video. So
Yeah.
You were pretty sick.
Yeah, I was quarantined to my room for 3 days straight. I barely left that place.
Yeah. At least the girls kept you busy with videos. But yeah, let's jump into it. I'm going to move to the slides here. Again, this is our market update. Numbers just came out for Ada County, Canyon County. We got numbers, market numbers we're going to be able to show you. Josh is going to go through them. Today we're going to be covering, how the heck are people even buying homes right now in this market? As we know, I feel like I feel like the media has flipped and they're acting like we are in an extremely positive environment right now, which we kind of been talking about, Josh.
Mm-hmm.
It's been so much doom and gloom, and now all of a sudden, everywhere you go, it's complete positivity, and we're up everywhere. Are we really? I don't know. We're going to see.
Yeah.
The numbers will show. Jump back into this. We're going to go over what's going on with buyer demand.
Mm-hmm.
We have more layoffs, an update on that, market updates, which we just talked about, and then you want to talk about the Avimore annexation update as well.
Yeah, absolutely.
And these are now in particular order, but yeah, go for it, Josh.
Okay, cool. So also before we get into the buy downs and stuff, if you have any questions, please throw them in the comments below. Also, if you could throw a little like down there, we'd like that. That'd be good. So with that being said, so we're just going to talk about, because a lot of agents right now are coming out and they're saying, man, we hit the bottom. And we have a lot of our clients, some people who have been waiting, following us for a while, said, have we really hit the bottom? Has this buyer demand just come wide open? And so we're going to look into that, right? And we can't deny the data. And that's what we have to go off of. Everybody can be emotional. If there was one house that maybe had a couple offers on it because it was priced too low, then yeah, somebody might be like, oh my gosh, the buyer demand is back. We're back into multiple offers. And yes, there are maybe a couple houses, but when you look at the data, we're going to see that there is not the demand that we've seen in the last couple of years, and maybe even in the last 5 years. And so I'm excited to get into that.
Before we go on there, why we were talking about the media here? Why is everybody pushing so hard that everything's in a positive environment now, even though the numbers not indicating that?
Well, I think there's a mix of two things. I think one, there's a mix of people saying, "Oh my gosh, we're back to a buyer's market," because they want to see inventory start moving, because they're hoping and hoping that maybe they could sell more houses this year. I don't know, or because it was so dead. But it normally is slower in November and December, but it was even slower in November and December. So now, with any kind of activity coming in January, because activity normally picks up in January, regardless of the season. And because we saw a pickup in it, now people are like, oh my gosh, it's over, and I don't think it's over yet.
Yeah. Well, so I'll let you jump into the first slide here.
Yeah, let's go to it. And we'll read a couple of these things. If you guys can't see these and you want to see them, or if there's a particular slide that you want to see, just reach out to us. We're happy to share this. This is data that we outsourced. We didn't create it ourselves, so we're happy to share the sources that we got.
I'll kind of just blow it up. I'm not sure if you guys are watching on cell phones or TVs, but kind of going through what the first slide Josh talking about here. Mortgage applications increased 7.4% from 1 week earlier. We've been kind of having like a little roller coaster ride on this, Josh, right?
Yeah. So, like last week it decreased. The week before it increased, and now we're seeing an increase. But it only increased for purchases about 4%. The biggest increase was the refinance index, which was 18%. But we're still down 37% from that same week a year ago. And so keep in mind, this is a survey of the week ending in February 3rd. This article just came out February 8th. But the survey ended on February 3rd. So this is the most recent from Mortgage Bankers Association.
Right. I feel like it's just a constant roller coaster. I think that's why a lot of the media is playing. Like it's up, it's down, it's up, it's down, it's up. Everybody's like, what the heck is going on? Kind of like, show this comment here, right here. Like this comment right here. It's a roller coaster ride. For sure. I think not only is it that, but it's for everybody's emotions too. There's a lot of emotions right now buying, selling market, real estate in general, actually financial market, anywhere you go.
Yeah.
But
And that's why it's just, man, you just got to be patient. And,
Yeah.
you know, I had one wise guy, super wise guy told me one time, he said, I got rich because I sold too soon and I bought too late,
Mhm.
you know, and the concept behind that was beautiful, right? He sold when he actually saw a increase. I mean, he saw the decrease, and then he bought when he saw the increase, you know, so he couldn't time it, but he saw enough that made him get off.
Yeah.
So
Awesome. Well, skipping past this, I know you kind of want to talk about the mortgage monitor as well. I'm going
yes.
to make this full screen for a little bit so you guys can see. I'm not sure if you can see it perfectly, but I'm going to go ahead, Josh.
Yes. Okay. So some people are asking us, how are people still buying houses with the affordability not here? And so we pulled this from Black Knight, and what you see on the left-hand side of the screen, that is permanent buy downs on purchases for purchase rate locks. So what you can do when you buy a house, and what people had to be doing, is that they were using the seller concessions, right? If you've been following our channel, you saw that some builders were giving, you know, 30, 40, $50,000 to help you buy down your interest rate. And what this was saying here is about 19% of them paid 2 points or more in the week ending in January 21st, 2023. So there's a good chunk. And if you look even at the graph, you can see that a majority of these people, the dark green line, are people who paid 2% or more and 2 points or more to buy down the interest rate. And what does the 2 points kind of equivalent? You know, it's a misconception. Some people think, oh, they bought 2 points, that means they got 2%.
First of all, we're not lenders. So
Yeah,
knows,
not
so.
lenders. So this is just a general overview, but
Yeah.
you know, we have to have at least a good enough grasp about it to talk about it. So then you can go to the lender or professional and talk to them a little bit more about it. But going back to this, 2 points isn't 2%. 2 points kind of equivalates to about 1 to 1.5%, because that's based off the secondary market. So when the mortgage broker is underwriting the loan and giving you the costs, they're going to the secondary market to see, okay, what is that 2 points going to be? And what you can see is a majority of these people who bought in 2022, they bought anywhere from a half a point to more than 2 points,
Right.
and which is kind of mind-boggling. But the part on the right-hand side, and this is something I want to talk about, because a lot of people, and you can see a huge increase from September all the way into January, where people are starting to use these 1-0 buy downs, 1-1 buy downs, 2-1 buy downs, 3-2-1 buy downs. And so we're going to talk about that here. So if you have any questions about that, please, again, we're not lenders, but we have a good enough grasp about them to give you a broad overview, so then you can go to the professional and talk to them. But you have to be careful because, well, let's just go right into the numbers. Okay. So a 3-2-1 buy down.
And I want to tell everybody, we're not pushing this product. We're just telling you,
Yeah.
this is what we're seeing. We're seeing how people are actually purchasing homes right now. And then, I mean, that's kind of what you're pushing, right, Josh?
Absolutely. Yeah. We just want people to be aware, because yes, inventory is moving, and some builders right now are pushing this. Hey, we will give you money for this 3-2-1 buy down or 2-1 buy down. And it's risky, guys. And what you'll see here. So let me break down what a 3-2-1. I'm just going to do a 2-1 buy down, and then you can use that concept for 1-0 buy down or 3-2-1 buy down. But essentially, let's say the interest rate is 6%. So if the interest rate is 6%, what a 2-1 buy down is, that first year, you're only paying on a 4%. And you got enough seller concessions, and that goes into an escrow account, and they make the difference from that escrow account for that 2%. So you're paying as if the loan is amortized on a 4% loan. And so you're only paying 4% for that first year. But after that first year, then it jumps to 5%. And so you see that here broken down on the right-hand side. So the first year, you're only on a $450,000 loan amount. On a 2-1 buy down, your first year, you're only paying $2,150. But by year 2, when that one interest rate jumps, you're paying $2,415. Mm-hmm. And this doesn't include your property taxes or insurance, or if there's a HOA.
Well, that's something I wanted to bring up. We were talking about this earlier, and talking about this concept is the last year we've been, obviously with the peak of home values going up so much, people had sticker shock with their property taxes and what they owed. And this doesn't take account. That's kind of what frustrates me about this program, is it doesn't take account for that. So you have these mortgage increases here, and then all of a sudden, if you get a property tax increase, that's going to increase your mortgage even more. So people really need to know what they're doing, be educated on this.
Right. And a lot of people are using this because the sell behind it is, hey, interest rates are going to go down. So why don't you make this payment? The seller's going to pay the difference anyway. So why don't you, for the first year, you pay the loan as if it's on a 4%. Interest rates are going down, so you can refinance it. But nobody has a crystal ball, right?
Yeah.
They could go down, but they could go up. They could stay flat. And by year 3, when those seller credits are gone, your mortgage has almost increased by $600.
Yeah,
So
so I can
it's
go
it's
to the
550
slide right here.
for the 2-1.
Look at the 3-2-1.
And then for the 3-2-1, again, it's the same thing. So it reduces the interest by 3% on the first year, then 2%, then 1%. And then by the 4th year, you're paying the full 6%. So you go from paying $18.97 on the first year. Then by the 4th year, when all those concessions are gone from the seller that are in that escrow account, you're now paying $26.97. So that's almost a $1,000 increase. And that doesn't, again, people are getting into these with the hope that home prices are going to turn around and go up so that you could refinance it, or 2, that the interest rates are going to drop. So the 2 things have to go in line. You have to have equity in your house to do the refi, and you also have to have interest rates drop to do this refi. So, so you're banking on 2 things, and it's just very risky. And a lot of people are getting into this. A lot of people are pushing this. And so we just want to be, just to say, be careful, be mindful.
Well, I guess the biggest factor with that is, I mean, no one can tell what 4 years looks like. If there's a job loss, I mean, this is kind of what we've been talking about in our foreclosure videos too, is we kind of see this wave of different loan options, and people could get in trouble with that as well.
Yeah. Before we go on, let's answer a couple of these questions.
Yeah.
And
Melissa up here. Melissa, hi Josh. I hope you're feeling better. Could you go over the benefits of why buyers pay all cash for a house versus financing all or part of their primary residence?
so I think I don't have a paid off house. So full disclosure, there was a time where we were debating, do we pay off our house? Do we not? And we decided not to. So I'm sharing this from what I've heard other people say. Having your home that you live in paid off, there's just something about it. So financially, from a strictly financial standpoint, especially when interest rates were at 2.875, financially doesn't make sense to pay off your house, because you could make more money investing that.
If you invest. That's the thing.
If you invest,
Right.
and you invest it correctly. So financially it doesn't make sense. But from some financial advisors, people we talked to, they said that there's just something about it when you have your house paid off. And so that's something, but financially it doesn't make sense. Where it makes sense is if you can't make more than what the interest is.
Well,
So
I'll speak for my friends. I mean, they have a paid off home. When they came to Idaho, they were able to purchase before we peaked, and they bought a townhome, they bought a primary residence, and then they ended up selling their townhome, paying off their house. And for them, I mean, it's complete financial freedom. So
yeah,
they don't have to worry about a mortgage. I mean, they just have to pay their taxes, or I mean, the state will take their house. But I
Right.
mean, having that $3,000 yearly payment or a $3,000 a month mortgage, it just depends on the situation. And I think if everybody had the funds, they'd probably pay off their house and just own it outright, because they can do whatever they want. They're not dictated by loan types or government or anything else like that.
Yeah. So I think it kind of comes down to, can you invest that money and make more than what you're paying in interest?
And she also said financing all or part. I know some people that pay a large sum of cash, but keep some for, I mean, it might be tax deduction, it might be business reasons, it might be something like that. I think every situation is different.
Yeah, absolutely. And so anyway, so that the benefit of paying off your house is you don't have anybody come knocking on your door, except for, the state saying, hey, come pay your taxes, or the HOA if you bought an HOA. Yeah. And then the other part is if you finance some of it or all that, the benefit there is if you can make more money, if you're being charged 3%, 6%, but you can make 10% over here, then you're making a positive 4%.
There's also a lot of people who pay cash for their homes, and then they go out and they refinance a small amount, and they take it out and go invest it. That way they can have a majority of their house paid down. They can use that small amount of that money they pulled out to go do other investments. I mean, there's all kinds of things to do. Just depends on what kind of risk level you want to have.
So to wrap that all up, Melissa, we did not pay off our house because we thought we could do better investing it than making that saving our interest rate at that time.
Cool. I'll bring up the next question too from Noel here. Are there any programs for first-time home buyers? And are you seeing first-time home buyers being successful in the market?
Yeah, thanks for asking that question. Yes, there's definitely first-time homebuyer programs. Idaho Housing has great first-time homebuyer programs. There's a chunk of our clients right now that are first-time homebuyers, and they are having success. But at the same time, we just want them to be very patient before they jump into something to really know. We were supposed to release a video on Tuesday, but we didn't. It went over the difference between renting and buying a house, because right now it's cheaper to rent a house than to buy a house, by a lot, not just a little. And so, yes, they are being successful, especially as home prices continue to decline. But we also want you to be very cautious, And
but
so
we're not talking people out of purchasing a home. It just depends on the situation, like always.
Yeah.
Right, Josh.
Yeah.
So
Yeah.
I feel like sometimes people come over like we're not being doom and gloom. We're just trying to present the facts, what's going on. But everybody's situation is different.
Yeah.
Some people may need to be here and they may need to move,
and they may need to buy a house, and
Right.
and we'll help them. But at the same time, our philosophy is we educate.
Yeah.
And after we educate, if it's your decision to make. So
yeah, we could be like every other YouTube channel that just pushes.
Yeah.
I mean, glory and everything's great and up and up and up. You should buy. But we want you. You're the one making the mortgage, not us. So we want to go to bed at night knowing that if we sold you a home, that you feel good about it and you feel comfortable. So,
absolutely.
Yeah, I got another question here from Johnny. I was excited to buy a house this month, but our home business took too many deductions, so it cut our income in half. Should we wait it out or try again next year?
Yeah, that's a good question. That's all going to depend on your business. I mean, being a small business owner myself, it's always great having the deductions, but
that's I think one difficult part is we're not accountants and we're not the lenders. So some crucial details we don't see, and when we're told that people can, but then they can't, it's hard for us to be in the middle there.
Yeah,
and really you just got to take a look at the situation and better plan. But by the numbers we're going to jump into here, which everybody's probably waiting on the numbers here, we're going to show you maybe it's not so good of a time right now because numbers are still deducting a little bit. Looks like you got to focus there.
Yeah, I was trying to get my face there.
But let's jump into those numbers and then you can decide if.
Yeah, and as we jump into the numbers again, for those who just joined, really mean a lot if you guys could like this video and post your questions as we're going through these.
Yes. All right. I'll bring up the slides. Get past these buy downs here. So Josh, I'm going to blow this up right here and then you can kind of talk about it and I'll bring us back on.
Okay. Yeah. All right. So this is what we did is we wanted to take, from the time that a little bit before we started sounding the alarm. I think we started sounding the alarm back in March when we saw these things happening. In May was the peak for Ada County for the single family homes. This is residential, resale and new construction together. So the median sales price was $602,000. About March, April is kind of when we started telling our clients, hey, let's sit it out, wait 6 months. Some people didn't, and that's fine. But that's when we started saying, hey, if you can, let's go ahead and wait to see what happens. Now we're sitting January of 2023. Ada County's median sales price is $487,000. So that was a huge drop. To be exact, there was $115,000 from the peak to where we're at the end of January, about 19% down. So that is a major drop, and it's hard for me to see. And we're gonna.
You had to double check the numbers and recalculate it because we didn't believe it. But so I don't know if everybody can actually see those graphics. We can share them afterwards. But from the peak of 602,000, we're now down 19% or $115,000 from May of 2022. So keep that in mind.
Yeah,
kind of answer your question there, Johnny.
So if trends continue, Johnny, then you're going to be sitting pretty good. Come next year.
Yeah.
So, but we're going to go into, because again, it goes into demand and how we just temperature gauge the demand. We look at the pendings, and so we have to see the pendings, and then to make sure that the numbers aren't skewed, you have to look at the inventory. And so what we did is we threw this together. This is going from 2018 to 2023. We didn't have quite enough room to put 2017, 2016 on there. But our pendings as at the end of January were 975. Last year, because we're doing year-over-year trends, because then that helps take out the seasonality. Last year in January, at the end of January, there was 1,346. And if we go back, it wasn't until 2015 that we saw homes pending this low. So we're looking at what that's doing quick math here. That's 7 years. 7 years, our pendings are down. Our pendings are down to a 7-year low.
See, and this is what I don't understand is everybody's pushing that the market's up. And
Yeah.
I'm always hearing that number's being thrown around 10%. And I mean, I think it's a matter of fact, I'm not sure where they're pulling numbers from or how they're doing their math, but this is the data and this is what we look at.
Yeah.
These numbers just came out today.
Yeah.
To let everybody know, this is not stuff we're just pulling out. So,
Yeah.
And just in case you guys can't read that, I just want to just say again, month over month, we decreased 5.3% from 515,000. Pending sales are down 27.6, not up 10. I don't know why everybody keeps saying that. Lower than 2015 or 2016, Josh? I think you said 2015 earlier. So
yeah, lower than 2016. That was the last data that we could
Right.
pull from BRR.
yeah,
So this is the data they put together.
yeah.
Mhm.
Just in case people are just coming on now, I mean, go back and watch. But I want to bring this full scale for you guys to see the drop we've had here. I mean,
And in less than a year. Less
Yeah.
than a year, it's been almost 20%.
and I kind of remember like when we first started doing these videos, we were talking about a 20% drop in sales price, right? And
Yeah.
people called us crazy. People said
Yeah.
we were insane. People said that would never happen. We even called. We even called for I think 30%.
Yeah, we had agents saying like, "What are you talking about?
Yeah.
I just had my friend who works for this company. They had, offers that went over list price, and they can't keep a house on the market."
Yeah.
And which brings me up. If you guys have tuned in every week, next week I'm super excited. We're having a guest. She's my friend. She's our friend. She's another real estate agent with a different firm, but she believes that our market is not going
Right.
down. And I just wanted to bring her on here because she has a different perspective. So, anyways, but let's get back to.
Well, if you have any questions for a different perspective, make sure
Yes.
that you comment, let us know so we can prepare for that. But she has a different outlook than we have, and obviously you can kind of tell our outlook. But
Yeah.
it'll be a good episode. So
Yeah, I'm super excited for you guys because we want to just give you two different opinions,
Yeah.
and let you guys ask questions. So
yeah, just to finalize, we're down 19%.
this is Ada County.
So-
We still got Canyon County to go, but let's
Yeah.
go to these pendings. Go back to that
Okay.
last graph, because the other thing that I want to point out here is our days on market. So in January, normal days on market, we're sitting at what? Back in 2018 was 42 days on market. Back in 2019 was 49. But this last January, we were sitting at 71.
Right.
And our closed sales were down. So our closed sales were down 32, almost 33% year over year. And I didn't go back to see, but they were the lowest closed sales prior to 2018. So from 2018 to 2023, these were the lowest closed sales that we ever saw in January.
Yeah. I mean, comments are pretty quiet, but I mean, if you guys agree or disagree, let us know and we can try and bring something up or tell us what you're saying.
Yeah.
Yeah. I just got a comment here. I just want to say thank you. I'm a numbers guy and this is very helpful. Well, we really appreciate that. That's why we kind of put this on there because I feel like not enough people in our local market are doing that. I mean, national, you have big channels that are doing it, but we're trying to present them locally the right way without a extreme bias. Like
So,
those channels. So
the last thing I want to bring up, because people say we have low inventory, and it's true, we do have low inventory historically, but our inventory is up 165% from the same time last year. And the last time we saw inventory like this was in 2019, we had about 200 homes more on the market than we do now. And so for the last 3 years, this is the highest it's been.
which is, I mean, good and bad. I mean, depends on what situation. For buyers, it's great because I mean they have more opportunity to look at more homes. Prices coming down, but unfortunately, we're still dealing with the interest rate issue.
But what we're also seeing is since the inventory is that high, it's not an inventory issue that's driving our pendings down.
Right. Okay. We'll jump into Canyon County.
All right. So Canyon County, this is again, we went back to 2016. Actually, can we jump to the next graph and then we'll jump back to this one? So from peak of Canyon County down to, and I actually typed in Nampa, but this is Canyon County single family home stats. So all of Canyon County, that's Nampa, Caldwell, a couple other cities, Middleton. From the peak, which was April 2022, the median sales price for that area was $476,000, and then for January of 2023, it's 395,000. Something I want to point out here, though, this is very interesting. If you look at that April of 2021, the median sales price was 395,000. Our median sales price now in Canyon County is 395,000.
Yep.
So look at that, from April of 2021 to January of 2023. Everybody who bought during that time, there's a potential. I'm not saying that everybody is, but there's a potential that they could be upside down in their house because of the median, how the median sales price has dropped that much.
And this is kind of bringing up your 10-year rule, right? That you're kind of talking about in our next video. So
yeah.
maybe you want to explain that.
Yeah. So I want to make sure you guys watch our next video. It was brutal. We recorded it yesterday, and I'm still a little sick, but I was really sick yesterday.
You're gonna pass out when we were making
So
the video,
John's like, "Are you gonna fall asleep?" And I'm like, "Yeah, I need to go take a nap." So we recorded it. It's gonna come out. We don't know if we're gonna release it tomorrow or next Tuesday. So we'll keep you posted on that. But let's get back to this. So that is crazy. So 81,000 from the peak of April of 2022 to now. So it's dropped about 81,000. So that's pretty crazy. So let's go back to that graph that we went before, so we can kind of break this down, because again, we want to look at pendings because that's going to help us see what is the demand like. So in January of 2020, we had 724 homes pending, and now we have 724 homes pending. Before, between there was 812, 1,034. So we see that our pendings are down. They're down 30% year over year, but we didn't see these kind of numbers since January of 2020. And then our inventory is up. It's the highest it's been since January of 2017. Mm-hmm. So it's not an inventory issue. Our inventory is up 108%, and our pendings are down 30%. So we definitely are seeing that. Our sales were down to 305, which is a 20% decrease year over year. So again, year over year, that helps us break out seasonality. And so it's definitely not that. Now, this next thing that we wanted to bring up, which is because a lot of you guys ask, what's the job market doing? What's going on there? And I believe this is the next slide that we're talking about, is St. Luke's just came out and they're going to lay off 2%. So we already heard that Micron's laying off, right? Micron is an employer here. They're already laying off, and I believe
Amazon too.
Yeah, and I believe Micron's staying under 500 people here in the Valley.
Didn't somebody actually correct us on that?
Yeah, it was like 360 some, 5% of their workforce here. And St. Luke's just came out and said they're laying off 2%. 2% of their and St. Luke's, and just in the Treasure Valley too. I just want to clarify. St. Luke's is laying off 2% of their workforce here in the Valley. So that amounts to about 320 jobs. So layoffs are happening. I mean, most people think the healthcare system, if you get a healthcare job, you're set because everybody needs that. But these people, unfortunately, are getting laid off. And so we'll have to see how that works. So.
Right. And I think somebody keep here. I mean, that might seem like small numbers to, that might seem like small numbers to people, but I mean, that's 320 people. That's a lot of lives affected. And, Idaho has an incredibly low unemployment rate, but still we're seeing more and more and more. And if we're wrong, people need to comment and correct us and actually tell us what they're seeing. But yeah, we'd love to get insider information on that as well.
Yeah. So anyways, that was one of the updates. Like a lot of you guys have asked what's going on in the employment sector. And so we've given you updates in the past. So here's the latest that we've heard about any kind of layoffs happening.
Well, and before we go to Avimore too, I want to kind of talk about, what's your outlook on the market? I mean, we could talk all these numbers all day and everybody can listen to a bunch of different YouTube channels, but what's your outlook, Josh?
What do I think's going on? Oh, gosh.
Yeah. What's your feeling?
I got my crystal ball right here. Yeah, I just got to look into it. No, just kidding. I think people are tired of sitting on the sidelines, and they're getting into the game to buy, and that's okay. As long as they have a 10-year plan, right? If they're planning to be there for 10 years, because remember back in 2007, we didn't come back to the 2007 values until 2016, 2017. So that was a 10-year time frame that people would have to stay in that house. And so if people are wanting to buy and hunker down, and then that's fine. But I do think we still have more decreases to come. I mean, based off these numbers, our demand isn't increasing like it needs to. Our inventory is increasing, and builders are still building. Now, builders have pulled back, but I have seen more sticks being thrown up
Slowly though. I mean,
slowly.
yeah.
But if everybody starts feeding into this, oh yeah, we're not going into it's going to be a soft landing, which I think is the false narrative. I mean, how can we? I just read an article today that 95,000 people in the tech world, 95,000 people already this year. So in 1 month, what are we? So in 5 weeks of 2023, there's been 95,000 people laid off in the tech industry,
Right.
and we're not even through the first quarter. So, anyways, I don't know. It's hard for me to think that our economy is strong. We have which I don't want to get into stocks because I'm not a financial guru, but we look at the bond, we look at the yield curve, we look at all these different things, and they're just not showing that our market's going to turn around. So yeah, I don't. And the Fed chair came out and he's still saying, hey, we're going to continue raising. And I think investors were hoping that he was going to soften. And so that's again, we didn't have time to put it on this graph, but there was another graph that we looked at about how lending is getting tighter. The commercial lending, the industrial lending, that's getting tighter. And I think it's going to, I don't know, I just think it's going to continue that the direction is going to continue downward. And if people
for how long? I mean, that's a hard. That's a
$1 million question. I don't know
why. When's it going to end? I mean,
yeah. I mean, I
how
think
do we even know? I mean, we don't know.
I think the thing is, like, I hate saying this, but I believe it. I think we need to see home. I think we need to see home prices continue to decline because it's so unaffordable, especially when you look at our interest rates versus the sales price today. Like we were talking to a client today. They were going to buy a house. They were looking at buying a house. Their approval at $425,000, putting their 5% or 3.5% down payment. They're still going to sit around a $3,000 to $3,300, and that's principal, interest, and PMI. That doesn't include their property taxes or insurance. For what you can buy for $425,000 right now is a 3-bedroom, 2-bath, and you could go out and rent that thing for $2,000. So you can't. Even if you, and I'm getting into that video that we just shot, but even if you were to buy that house and you decided to leave or you couldn't make the payments, you can't even turn around and rent that out and cover your debt basis.
Right.
And so there's there's a lot of risk. And so I that's why I just want to see home prices come down so more people can afford.
Yeah.
There's a lot of,
well, I think
it was, the only reason why I love these live streams is because I can go on rants. So hopefully, Jonathan, cut me off short if I'm going on too long of a rant. But over these years, I've helped single moms, I've helped retired people, I've helped small families, big families, whatever, retirees. And there's this story. There's a mom a single mom that I was trying to help find a house, and she just got priced out of a market in a matter of months. And because of how fast home prices climbed. And to me, I want to see home prices get to a spot where that single mom can now buy a house again. Like that's what I want to see. And that's why back in March, we started sounding the alarm, because we have clients that are like retired. They worked their whole life, saved up, paid off their house, sold their house, moved here or whatever it is. And we're like, hold on. Don't blow all your life savings. Something's weird's happening in the market. And that's why we're saying this, because we want to protect those who maybe don't have the time to look at this, right? We're paid to be real estate professionals. And so that's why we're trying to sound this alarm, because we want to help those who maybe don't have the time to do it. And again, we don't have a crystal ball, but there's a handful of people right now that I'm thinking, man, I can't wait till they can go and buy a house because home prices are coming down.
Yeah. And I mean, I think people are extremely frustrated. I know a lot of people are frustrated with what's going on in the economy, the housing market, everywhere. Everybody wants to purchase. They want to come to Idaho. They want to buy a home. They want to, have that structure, but it's not just real estate prices. It's the structure of the whole financial system. And, left to right, whatever spectrum on, it's not good right now.
Yeah.
They keep claiming things are coming down, milk's coming down, eggs are coming down, gas is coming down. I don't know about you, but it's not coming down at all. And it's crushing the middle class. It's crushing people who are trying to get in that home to provide that. And, we're all trying to find solutions for that. But I think it's going to take, like you said, a fundamental change of the entire market system.
Yeah.
For the, like you're talking about, prices keep coming down to allow people to come back up.
Yeah.
And it's unfortunate. It's kind of,
Yeah.
it's irritating. Every time I see it, it's just seems to get worse and worse. We're trying to be positive here, but like it's getting worse and worse.
And there's going to be a day where we can just shout great news from here, right? There's going to be a day that we can be like, oh my gosh, check this out. But we want to be honest too, right?
It's frustrating when people are on there just spewing that all day long.
Yeah.
How positive everything is when they're not actually presenting numbers. No one's giving numbers. So
and that's I think why we go back to the data. So we share the data. Nobody can argue the data, right? And so so they may hate us. They may, I mean, we get hate mail, but they can't argue the data. So anyways.
Definitely. Got a couple comments here. Alex, keep up the good work. Hey, thank you. We really appreciate that.
Thanks, Alex.
Johnny again. Josh, glad you're feeling better. Thank you guys for keeping us updated on the housing issues in our valley. We always look forward to watching your cast. Awesome. We appreciate being here every single time. So that's good.
All right, let's jump into that next slide. So the other thing, if you guys have been following us, we're going to go into Avimore right now. We're going to talk about this. This is an area that's trying to get annexed. Right now it is, oh gosh, it's in the county, but the city of Eagle, they're trying to get annexed into the city of Eagle. And so we're just going to briefly talk about this. Right now they went before planning and zoning. Mm-hmm. And I'm just going to give you guys a quick rundown of how development works. So when you are developing and you're trying to do something, you go before planning and zoning. Planning and zoning gives their recommendations, and then you go to the city council, and the city council votes on it. So they went before the planning and zoning. Planning and zoning shut it down, and now they get to go between planning and zoning is recommending to not approve this to be, and so the city council now will hear the people and decide if they're gonna. But you want to break down this article?
The crazy part is annexing Avimore would add nearly 9,000 homes to Eagle and 860,000 square feet of commercial space. Developers say about 50% of the land will be protected as natural open space, which that's just 9,000 homes. That's quite the growth out there. But I don't know if you guys seen the video or not. You can go on YouTube or you can go on here and watch it. But a lot of frustrated people over it as well. I'm not sure if anybody lives at Avimore. They can kind of comment and let us know what's going on, what you guys see. But it was first proposed in the early 2000s. And it was the build over the next 30 years, a 64% increase in population. And correct me if I'm wrong, I know Avimore had some issues out there as well, right? With some water rights and some soil.
Yeah, I'm not going to go into that, because I'm not well versed on it. But the problem with Avimore right now, the developers are crying, and I believe this article goes into it, is because they have to go to Jim County, they got to go to Ada County, then they have to go to the cities that are around it, right. And so it just makes it really kind of a headache to keep coming. So, yep. I think the city, the people who live in the city, they're saying they're concerned about our water quality is going to go down because now the city will have to provide utilities to them. So, I don't know. I don't know what we're going to keep you updated right now. Again, it has to go be in front of the city council, and the city council will hear the people, and they'll decide if they're going to move it in. So
beautiful area though.
Yeah, it's a great area.
I'd love to be out there, but
you can go hiking straight from your backyard, pretty much. I mean, some houses you can't, but you can almost go hiking straight from your backyard, and you're right between Horseshoe Bend and Boise. So if you have a razor, I mean, Jonathan likes going out on his razor. So.
Know about you, but I'm out. But
I know I just haven't had time.
Metal Tracker, I appreciate your honest opinions and agree with you both. Great update. Well, we appreciate that. We just wanted to come on and give you those updates because literally we're sitting here building this cast right here, and the numbers came out. What, Josh? An hour before we were gonna start going live.
Yeah, and I'm like, okay, hey, we got to stop everything. Don't even worry about those graphs about the demand, the commercial demand, the industrial demand, and let's just focus on this because we want to give you guys these because we get a lot of calls from you guys, and again, you guys are welcome to reach out to us. We're always happy to answer questions, even if you see this live stream after. And so send us your questions again because we are getting ready to wrap up, but.
Well, we'll stay on for a little bit if people have questions.
Yeah, throw your questions right now as I want to share some things with you. Throw your questions on and we'll answer them. But next week, super excited. Wanted to just bring on a friend of mine from a different brokerage. She's a real estate agent, and she believes that the market is going to go in the opposite direction. And so send us your questions that you want to ask her, so that way her and I can be kind of well-versed if you guys have any of those. and we do hope that we'll see you. And it's just gonna be a conversation, right? She's a friend, so it's not like the scary thing. We try to ask another YouTuber on here. We asked him publicly. He said he would. We haven't been able to connect, but maybe you'll also see a public YouTuber that has a different opinion.
And I just kind of want to bring that up. Yeah, I mean, our biggest thing, we have our long form videos, which some of you watch. Hope you go back and watch them. But on these two, we try and give you raw data and then information, but also have somewhat of opposing viewpoint. I know we bring lenders and stuff, and not everybody really agrees with what they say, but that's fine because it creates good conversation, and we get answers to our questions.
Yeah.
I'm trying to say. And I like the debate we can have.
Yeah. Well, and iron sharpens iron, like there's times that we've said stuff that were wrong, and there's times that we've said stuff and they said, "Hey, you're wrong." And we went and looked back and we're like, "No, you're actually wrong."
Yeah.
But iron sharpens iron. So we appreciate that kind of stuff.
Yeah. Another question here from the Brave Movement. My wife and I plan on moving to Boise here this summer. Do you believe that the rental market will still be much cheaper than buying? You just are well versed in this, Josh. So you just want to follow the numbers
So
in our videos,
all right, the Brave Movement. I'm gonna have to. I'll answer this. I'm gonna give you a quick sneak peek on what we're talking about in this video. I think, Jonathan, are we releasing that Tuesday? Is that what you decided?
I think so. Yeah.
Okay, we're gonna release it Tuesday. We're gonna do it. So right now, it's about $1,000 cheaper to rent than buy. Now, again, it's gonna depend on what you're looking at renting. But we looked at Coeur d'Alene, Twin Falls, Boise, Nampa, Meridian, and we didn't go in Caldwell, right? Nope. But we looked at those 4 markets. We looked at apples and apples homes. So we looked at a house that was the same square footage, same build, same style. Then we looked at one for sale and one for rent. And the listed rent price was about $1,000 cheaper than what it would cost to buy the house. And so the things that we've talked about is like, okay, if you put a 5% down payment, if you're putting a bigger down payment, like a 40% down payment, then it's going to be different. But we just base this off a 5% down payment. And if you put 5% down, and so you're going to have PMI, you're going to have HOAs, you're going to have property taxes, all this, your payment is substantially higher, and we threw in things like, okay, you're going to have maintenance costs and that kind of thing. So it was cheaper to rent. And if our inventory continues to increase, which again, January is normally our lowest and it increases all the way until August. So as long as our inventory continues to increases and the buyer demand stays the way it is, then I think, yes, I think the rental market is still going to be cheaper than buying.
I like that question. I appreciate it because I was looking over Josh yesterday when we were making the video. I'm like, you realize we are agents. You're talking people out of the real estate market right now.
Yeah.
But that's, again, we just want to be honest and upfront because if you are ready to ever buy, I mean, hopefully you turn back to us because we'll provide you good information. So
yeah, and I also disclose, like, I'm a firm believer in buying and holding real estate.
Right.
But there's a time where it's like, okay, is it financially, what does it make sense? And right now, financially, it doesn't make sense to buy if you can rent it for the same price.
Yeah, definitely. And he says, thank you guys very much. We appreciate the honesty.
Yeah.
And we got a comment from Lisa. Thanks for all the great content. We appreciate it. Thanks, Mom. She's always watching. So is my dad, which is great. So yeah.
Get a little support.
You got anything else, Josh?
I think that's it. Just one last reminder. If you haven't liked this video, we'd appreciate that. If you haven't subscribed to our channel, we love it. If you subscribe, that really helps us. And then also remember, next week we have a guest speaker, has a completely different mindset as far as where the house market's going. So let us know your questions and we'll get them over to her and us. But I think it's going to be really good. She's also well-versed in low-income housing. And so she's going to be we want to give her a spotlight to just talk about that because there is a small sector.
When you say low income, you mean affordable housing units or?
Yeah. Like affordable house, like how low income, affordable housing. There's a couple projects here where you have to be below a threshold in order to buy.
So disclaimer, you know her, I don't. So do I have to be nice too?
Yes, you have to be nice.
Okay. I'll try it.
Everybody has to be nice.
Perfect.
So
last comment from Johnny. I think as the housing interest rates go up, people that want to rent their houses are going to need more unless a house at a low interest rate. What do you think?
Sorry, I got to read that. I think a house has it. Yeah. Yes. Yeah. Essentially, either the home prices have to drop or the interest rates have to drop in order for it to be more affordable to buy.
It's like our website's going off there. So,
Yeah.
anyways, but yeah, I mean,
So-
interest rates have come down, prices have to come down
So
as well. But
cool.
if we don't got any more
right,
questions,
guys.
I think that's it. And we appreciate everybody being here. And please, next week, be here because I'm super excited. Like I said,
Yes.
disclaimer, I don't know her, but I'm not going to be mean.
Yes.
But I like to ask hard-hitting questions to people who have a complete opposite thought pattern than we do about the real estate market. And maybe I can learn something. Maybe I won't, but I guess we'll find out.
But we will learn something if we have open ears and open minds.
Definitely.
So
Have a good night, guys. Thanks for being here.